What's up guys, welcome back to my channel. So today I found a stock that has 30% increase this year. It's one of the stock in the restaurant industry, and that is Domino Pizza. Ticker symbol is DPZ. So if you are interested in Domino Pizza stock, please keep watching. Domino's Pizza is the largest pizza company in the world based on global retail sales, with more than 17,000 locations in over 90 markets around the world as of December 2019. Founded in 1960, the company's roots are in the convenient pizza delivery, while a significant amount of sales also come from carry-out customers. Although the company's highly recognized global brand, it focuses on serving neighborhoods locally through a large global network of franchise owners and U.S. company-owned stores. The company is primarily a franchisor, with approximately 98 of Domino stores currently owned and operated by independent franchisees. Franchising enables an individual to be his or her own employer and maintain control over all employment-related matters and pricing decisions, while also benefiting from strengths of Domino's growth brand, operating system, and financial resources. So there's some bulls and bears opinion about the stock. The first bull opinion is the company makes good use of their technologies. People can order pizza in their mobile app, and they can also track delivery to get prepared to receive the order, as Domino is well known for their fast delivery. Because most of the company order is through delivery, and very few order is through takeout, and no order is in restaurant dining. So that's why they benefit from this pandemic, because they have invested heavily in their delivery system. The company also invested in some innovative technologies like use drone for pizza delivery. It has been successfully delivered their pizza in New Zealand, and that is also what Amazon trying to work on, is to use drone for delivery. And Domino has also invested in auto delivery cars to further improve their efficiency. The second bold opinion is most of their business is through franchising. So the startup cost for franchising is $100,000, comparing with their competitor Pizza Hut, which needs $300,000. The threshold is lower, so that enables more people to start up their Domino's franchisee. And that was a business model that helps the company make high profit margin, probably because the small business owners is the boss of themselves, so when they're working for themselves, they usually bring more value. And the third bold opinion is they have achieved scale benefits as the largest pizza company in the world in terms of sales, which has beaten Pizza Hut. Because they achieved large scale, they can further bring value to the customers. As I saw, their advertisement is $5.99 for different mix and match food. So I think as the currently economic downturn, the value products will always be in trend. The same situation applies for McDonald's and Walmart, and that's why this stock has been seeing the potential by the investors and be much loved. However, there's also some bear opinion. The first one is because in the food industry or retail industry, it's hard to do monopoly, or simply it's not possible to do monopoly, because consumer preference is always fragmented. Like different people like to eat different food. So since they are already the largest in the pizza categories, it's hard to make the growth significantly, although they do have the ambitions to open more stores worldwide and also in United States. The second bear opinion is nowadays consumers are trying to shift to more healthier options, like their choices can be Panera Bread and Chipotle, which also use the internet way to acquire new users. So that shows they also face the competition in this restaurant industry. After this year's social distancing hit, the U.S. restaurant industry seems to be finally showing signs of recovery. Earlier in this vigorous U.S. economic movement restart, the catering industry began to see a surge in passenger flow. In the past week, catering stocks has seen a collectively pull up. At the same time, Domino's Pizza has a surprising earnings report for Q2 this year. The company's same-store sales in US surged 16% in the last quarter as consumers order more pizza during this pandemic. According to the report, net sales increased by 13% in the quarter ended June 14, with the second quarter revenue of $920 million, beating the expectation of $911 million. Earnings per share is $2.99, beating the expectation of $2.24. And at the time when most companies suspended dividend payment, Domino's Pizza announced it would pay 78 cents a share to shareholders on September 30th. As of the second quarter, the company has $248 million in cash and cash equivalent. The financial report also showed that the company pointed out $11 million in the costs related to epidemic in the second quarter, mainly due to employees' sick leave and personal protective equipment expense. At the same time, due to the decline of revenue due to the closure of some stores, the company lost around $7 million and saved about $1 million in travel expenses. The company's CFO, David Lawrence, said, "We still believe that we'll be able to expand our global market share during and after this outbreak." However, the data show that although U.S. market has performed well, the same-store sales in the global market only increased 1.3%. It has closed 2,400 stores, as the period of cases are increasing in the world, and more than 600 stores were still closed as of July 8th. The fact is, recent data shows the U.S. restaurant industry is still deeply hurt by this pandemic. In addition to Domino's Pizza, many restaurant chains are still in deep crisis. According to Placer.ai in June, the catering industry has been improved a little bit. The average passenger flow of 8 top fast restaurant brands decreased by 27% year-on-year, although it was significantly higher than that of 37% in May and 54% in April. It needs to be noted that the basis for this data improvement is relatively low. For example, although Starbucks and Dunkin' brands have reopened, considering that breakfast is the last meal consumers would like to eat out before, those two catering companies are actually the most affected. This also gives them more room for progress compared with other enterprises. Placer.ai pointed out that the passenger flow models of Restaurant Brands International, ticker symbol QSR, who owns Chick-fil-A and Burger King, and also McDonald's, show that in most of June, compared with same period last year, the weekly passenger flow has stagnated or dropped sharply. In other words, there's no strong support for these restaurants to rebound after the recession. The recovery of the U.S. food and beverage industry remains unstable. This is mainly because of the great uncertainty of U.S. economy prospects, the high unemployment rate, and the failure of the government to provide funds for a new round of economic stimulus in time. At the same time, the number of new cases in some states has increased significantly, and many states has also restricted the restaurant business again. And it also shows that during the period of pandemic isolation, some people have get used to eating at home, so it will take longer for the traffic volume back to restaurants. So to sum up, since Domino's business model is mainly on delivery and no dining in, so they are not affected much by this pandemic. I think that's why their stock price is not heavily affected by the current situation as what other restaurant brand has did. Consider the other risks that may have, like from the competition and from the nature of the industry. Investors also need to keep that risk in mind before make any investment decisions. So the current stock price 380 with a PE ratio of 33 and forward PE ratio of 30. So I would expect in the near future the price would drop further. My thinking is investing in the stocks that provide value products to customers will be more stable rather than other growth stocks which seems already peaked. So this stock will definitely in my watch list this month to see whether there's any opportunities to buy. That's all my thoughts about Domino stocks. Thank you guys for watching, and I will see you very soon. Bye!